most big banks that are going to lend you a first mortgage do not like a second mortgage behind them. And they're never going to go in second position. You're not going to find RBC going in second position.
Correct.
Welcome back to REI Hot Seat. Sitting here with Jacob Campanaro, real estate realtor extraordinaire.
You're going to call me a real estate investor. I am that too.
Investor too. Guy who helps real estate investors.
Yes,
and doing it like very, very investor focused. Like a lot of people say they help investors, but they do homeowners too.
Nope.
And it's not to say that someone on your team hasn't, but you're usually the guy doing the multifamily buildings, the commercial mixed use buildings.
It's like niche, right?
Yeah.
So we like, at least what I do, like we have this team and we're building this team where I want to be able to service every different niche.
Yeah, but you have different professionals.
Well, like
those
everybody on
different
my
things.
team has obviously they're all very well versed in real estate in general.
Yeah.
You know, we can sell a house, sure, but I think everybody kind of has a general or a very specific niche they focus on, whether that's hospitality, multifamily, duplex, triplex, building, development.
Brooke does a lot of the duplex conversions.
All the fun stuff.
Yeah.
All the fun stuff.
Yeah.
But no, so today I came in with a topic, and I wanted to talk about two buzzwords, let's call them, right? Which is number one is going to be VTB.
Yeah.
And the other one I want to talk about is OPM.
Yeah, VTB and OPM.
A lot of acronyms here today.
So you're talking about the two acronyms, VTB and OPM.
OPM.
Thrown around a lot in the real estate investor world.
And this came about because I had a lunch yesterday with an investor, and we've done, we've purchased a couple duplex conversions, triplex conversions actually for him. Really motivated, really driven guy. Like he flipped over he bought a single family in Toronto and flipped it into 3 units in 3 months. So He did the full reno, and he's living in the main floor now. It's like the ultimate house hack. And now we're going for the garden suite, right? But we had this lunch and we started talking about, okay, well, a lot of my capital was used on this triplex conversion. We're going to be able to refi out all of his initial capital, but he wants to continue doing this, and now kind of his affordabilities and his capital shot, right? So we're sitting down, and he brought up terms like VTB and OPM, and they were these big kind of scary topics. And over the lunch, we had about an hour and a half lunch, and over the lunch I sat down and we broke it down into a very simplistic and very understandable version of those acronyms.
So that's why you wanted to
and that's why I wanted to do this today, because
it was
a great conversation and really dive into it and discuss the importance of both of them in the market right now.
Yeah. Well, okay, so let's just get it out what they are. So vendor takeback mortgage, that's when the seller's giving you a mortgage.
Correct. That's a VTB.
And VTB is what you'll hear for short, and a lot of people wouldn't think to ask. A lot of realtors have never in their lives dreamed of asking for one, never been around one. So there's definitely a knowledge gap out there.
And let's talk about that before we go to OPM.
Yeah.
Right. Let's actually dive into the VTB.
Yeah.
So the VTB right now, and I was just having another conversation this morning with my colleague Zach, who was on the last episode with us, and we were talking about the importance of a VTB in the current market, and it cannot be overlooked. Like this is the one topic. Your realtor, it should be the first thing out of their mouth right now.
So VTB, first thing out of the mouth. And in what circumstance? With any house, with a duplex, with a triplex, with a multifamily building?
Honest. Okay. So maybe not so much in the single family realm, but
getting into the larger multis.
Into the investment realm.
And when you're talking VTB, most big banks that are going to lend you a first mortgage do not like a second mortgage behind them. And they're never going to go in second position. You're not going to find RBC going in second position.
Correct.
So how do you navigate that, or are you more suggesting this to people who are going in with private money or something like that, where the lender doesn't care? First mortgage lender doesn't care what you do behind him.
Yeah. So it's about having that conversation to start, right? So it's about and I want to take just a step back so I can answer that question, because the VTB is important for the seller and the buyer, right? If you're selling a building right now in the market, and you want top dollar, then you better be open to giving a VTB.
Yeah. Terms. Yeah.
Right?
What are your terms? Because if you want the price, you're going to give the terms.
Exactly. And then if you're buying in this market, right, to go out there and say, well, unless I can get an absolute steal, there's blood in the streets, there's this, there's that, that's fine if you're okay to wait for that unicorn to come along. But Otherwise, if you're an aggressive, active buyer in this market, you got to be creative, and we got to be thinking outside the box. And the easiest way to do that is just right off the bat, VTB.
Yeah, and I'll reference what we did and why it was helpful for us. Like, we got a second position VTB from the seller of the resort we just bought at, I think it was 6.5%. So basically a mortgage rate these days. And we got a 3-year term, and it's interest only. So I mean, that's lower cash out of pocket than you would have even with a bank mortgage of the same amount. Yeah, because it's not amortized. And so that's super helpful for us.
And to go back and answer your question, well, you kind of answered your own question there, right? What do we do with the banks in the first position, the second positions, and all this? So first off, let's discuss what that is, right? Yeah. So when having a mortgage, you have a first position mortgage, you can have a second position, you can have a third position, fourth position.
You could have a 10th if you find the willing lenders.
And so, and to keep it simplistic for this content here, what does that mean? For the bank, and I always
priority.
It's priority. Thank you, and that's the way I try to explain it to people. Right? And there's other little intricacies
who gets
in there.
Paid first? The first claim gets paid first. So the first mortgage is like the first mortgage claim on that title. Yeah. So if something happens, if you don't pay your mortgage, and the bank has the first charge, then they'll basically be able to recoup their money. Whereas there might not be enough to cover if they initiate a power of sale. There might not be enough to cover the second mortgage owing. Yep. And the second mortgagee might not get paid back. So that's something to keep in mind when you're structuring it, and also just to understand where the bank's coming from. When they don't want a second, like institutional banks, they just realize that that's an extra burden for you to pay. So they'd rather you have the money and not have another obligation to pay. That means you have more money for them, the bank.
Exactly.
Yeah.
And so then, now that we got that out of the way, right? Yeah. So understanding that if the seller's giving you a VTB, that's why the bank most likely wouldn't want it in second position. They don't want to see the loan to value more than X, right?
Yeah. So they'll do the DCR, right?
They'll do, exactly.
So there are banks out there that will allow a second mortgage, but both mortgage payments have to debt service.
Correct.
Yeah.
Right.
And that's hard to do.
You see it from time to time. Yeah. I'm working on a deal right now where the first position bank has sent an email saying, yes, we'll allow a VTB in second up to this amount, allowing a DCR of 1.1 to 1.2. Right. Yeah. And so that's the parameter. So in some cases, yes, you can do it with a first position mortgage. Another way to go about it is to actually register that VTB on a different property.
Yeah.
Right. So
and that's a Carmen trick that
sure is. Right. So you're buying property A, and maybe you have property B, which is something out in the middle of nowhere, or a small little house, or your personal residence. And then that VTB can then be registered on that property. Maybe that's paid off. Maybe the bank doesn't care on that one.
And that's a conversation to get on the phone with, hopefully with the seller if you can, or the seller's realtor, and just say, hey, we're going to need a VTB. Oh, yeah, no problem. We'll do that. Okay, and one more thing. The bank won't let us have it on the property A, so we're going to have to put it on my other property. I'll give you an appraisal and show you the value.
Security.
Yeah.
Right? Whether it's on here or here. And that's what I like to throw back at. I like to ask questions to the sellers, and, and really like I'll build a pro forma and show them why this deal doesn't work without a VTB, and then give it to them and say, Mr. Seller, like, if you can find a way for this to work, I'm willing to pay your dollar amount.
Yeah. Because then you're not arguing, right?
No,
you're saying, I'm willing to concede. I'm willing to concede to your point of view. Please just answer the following for me.
Exactly. I love that approach. Yeah. As soon as you start arguing, you lose.
Yeah, don't argue.
Because then emotions and ego get involved. And
do conditional acceptance.
And you're out.
Do conditional acceptance. I think we can get a deal done if we can find a way to make these numbers work.
That's it. I love it. So it's honestly one of my favorite things to do when negotiating. I always put numbers and math and or even the realtor, right? Hey, like, you guided your client to price the building here. I can't get financing here. So what do you want me to do? Pay 50% loan to value. Okay, well then, you know what? I'll move on to the next.
Another thing I like is if you make it a we thing. What can we do here to make this work? And then now all of a sudden you're not competing. You're not competing interests. You're common interests.
Well, and that's it. If the realtors can get together and say, hey, we're here to do a deal. Like, at the end of the day, that's what our job is. We're here to put deals together. Obviously, protect our clients. But at the end of the day, we want to do deals. Right? Yeah. So how do we work through and find these deals? Anyhow, so negotiating a VTB, that could be a whole nother episode. And I know we did touch on that a while back, right? Kind of how to
Yeah,
negotiate VTBs.
we'll probably save that for another episode, and even the OPM thing, we can
We'll
touch
do that
on
next
that.
episode.
We can do another episode on that. But is there anything else to cover on the VTB?
On the
still?
VTB thing, yeah. So just really, like, I think the takeaway from this is going to be, make sure you're having that conversation no matter what it is right now.
And your realtor
right?
needs to know.
And your like I said, it should be the first thing out of your realtor's mouth when negotiating.
Yeah.
Right. What's the VTB? Is there a VTB? How much VTB?
Yeah.
Right. And
how much VTB is your seller willing to give? Not asking, are they willing? How much are they willing to give?
Honestly, that's how we do it. Like, I train my team, all the new recruits on my team, when they're hitting the phones and they're making calls to find numbers to run analysis and stuff like that. The top questions I say is, okay, income and expenses, VTB, and debt structure, right? Is it free and clear?
Yeah.
How much debt? Right? Because you need to know.
And if you know they're free and clear, now they have the flexibility. Or if they only have like a $300,000 mortgage and it's worth $2 million, now you know they have $1.7 million or $1.8 million to work with.
And then back out closing costs and taxes and realtor fees.
And they probably need a little bit to go buy something. Right. So maybe if you know there's 1.8 available, maybe you could get 1.5, 1.4 of that.
And that's it. Yeah. You'd be. It's unbelievable how many times I've reached out to a realtor and actually gone through the math and explained it, and they said, "Oh, I didn't even know that was a thing," or like, "I didn't even know that was an option. My client never even mentioned it."
Yeah,
right?
A lot of them aren't thinking it. A lot of them aren't thinking it, and this is why you kind of want to work with a specialized realtor. You can either educate your realtor yourself or find somebody who knows that already, and that's part of their toolkit.
Yep.
But it needs to be there to get those creative deals done, because we looked at a deal the other week. I know we disagreed on whether it was a good building to go after, but it came with giant VTB at like no amortization, and there was a huge value to that. Like if you work out a VTB over 5 years, and you find out that's going to save you $100,000-$200,000, put that in perspective. Like, you could easily, you could either pay $200,000 less for the building, or you get this VTB with it, you can give them full pop.
Yeah.
So, I mean, obviously you got to make your numbers work, but they're worth something. VTBs can make a deal, and it's definitely something that if you're not asking, you're missing out on an opportunity.
There's opportunity, right?
Yeah.
And sometimes they just say no, and that's fine. Like,
that doesn't mean you don't keep asking other people.
Other structures, right? We can talk about creative financing, assuming financing, things like that.
Yeah.
So, and this is something I do want to talk more and more about as we
move
forward.
This is when you go into the realtor on the other side and you say, hey, we both want to get deals done here.
Yep.
Numbers don't work as shown, but what do you say we look at this and we find a way to make this work?
Always.
And then, okay, now they're on your side. Okay, well, here I see two different ways. Do you have another way? And you go through the main two ways.
Honestly, and that's if anybody's negotiated with me that's listened to this, or clients that have worked with me listening to this, they'll know that's how I like to negotiate. It's always very sophisticated, very mathematical, right? Let's just, how do the numbers work on your end, right? And even when I'm listing properties, it's the same thing. It's going, I want to get you the absolute top dollar for your property, but we got to find a way that we can market it that. You can't just tell me it's 5 million because I like that number.
Yeah,
right?
we have to be able to back it out and show
let's work it backwards and say, sure, even if 5 million is kind of on the top end, let's figure out a way to get there. And that's where the VTB can come in.
Yeah.
Right? Okay, I can get you 5 million, but you got to give a second position VTB for $1 million.
You got to be willing.
Right?
Yeah.
Help float that boat, especially with where interest rates are today. And that's the only other thing I'll mention before we wrap this up, because we're going a little long, but the interest rate is actually extremely important on that VTB right now.
Yeah.
Right? And I don't want people to get bogged down with 2%, 1%, stop that, right? The main focus is sellers are pricing buildings as if interest rates were a year ago, right? So give me the interest rates that were
from
here
a year ago. Yeah.
It's as simple as that, right? Hey, the math makes sense if interest rates were still at 3%. But they're not. So why don't you give me a 3% VTB or a 4% VTB? Yeah. And all of a sudden you'll run your math and you go, oh yeah, things start working out, right? So you can blend it with the first mortgage. You can ask for a first VTB. So Mr. Seller, if you have the equity, give me 75% loan to value on a VTB for 3 years. Let me stabilize the building with the interest rates that I wanted last year and the price you wanted last year.
Yeah.
And then in 3 years from now, I'll refi, you get your money out, and we all move on happy.
And I've heard an accountant say that up to 5 years, there's a tax benefit up to 5 years, but after that, it's not. So potentially, VTB's up to 5 years.
Yep. That's it.
You know, take advantage of that and write that in. I know for ours, I was quite picky about the terms on it. I said we need to be able to replace it. Replace the first in front of it without that being paid out. We negotiated that in. So it's like whatever you need. We had the deal progress, and then we just said, hey, before we firm up, we just need, you know, we need you to add this.
And listen, and that's a good lawyer, right? Like don't lean on your realtor or your coach to be like, what do the terms of my VTB look like? Like we're registering a mortgage here, folks. Like
the lawyer's going to
get a lawyer
look
that
over
knows
the
what
terms.
he's doing.
Yeah, and that does get sorted out. But of course, you want as much as possible in the main contract.
I tend to leave mine a little bit light, right?
And then you have it negotiated
I generalize
later.
the terms. I say, this is the amount, this is the position, this is the interest.
And then you let the lawyers negotiate the rest? Is that how?
Yeah, because it's standard charge terms.
Yeah.
Like a mortgage charge terms are I'll put in there, I go, the seller and buyer's lawyer will register the standard charge terms on or before closing or on closing.
Yeah. Yeah, exactly.
You know,
they're standard. They're all, banks would use them, all that stuff. So
Yeah.
that's all fine and good. But I mean, the thing about replacing the first and being able, not having to pay out the second, like that's more specific.
Correct.
And for me, I know we kind of went back and forth on that and said, let's come back to that. We did our contract first, and then we came back to that when the lawyers had it.
That's it.
Yeah.
That's it. So,
but this isn't advice on that, guys. Like every situation is unique. The people dealing are unique. You know, if you're working with a lawyer, you know, you can get it done. It might be different than, you know, the other lawyer you've worked with. So, always make sure you're working with the right professionals and talk to your lawyer before you do anything.
That's it.
Yeah.
Always.
Yeah.
We
Like
don't
if you need the mortgage to be like so to get the deal done, don't go do it without talking to your lawyer first.
Correct.
Yeah.
Or the bank or whoever, right? Like speak to your team. That's the most important part. And then, you know, and that's what we're here to do. So if anybody has questions about VTBs or anything that they hear on the show or like, there's a link below.
Yeah.
Anybody can go down there and click on it. You will get a call from one of our team members.
Yeah.
They'll set up a call for us to speak.
Yeah.
And then we can dive into, you know, the nitty gritty on a VTB and maybe even go try to get one on a property. Right?
Yeah. This is more for people who are actively like planning to buy buildings or invest in real estate and want to build this into your toolkit and maybe potentially want to work with Jake. That's what that's there for. If you have general questions, you're just curious, post them in the comments. And we'll, that way, you know, the answer can get out to more people too.
That's it. Love comments.
All right, cool. Jake, thanks for doing this.
Thank you.
Guys, thanks for tuning in. We'll see you again next week.